Let's shift focus then to our software. Management joins in to discuss their numbers. And on earnings with ET now, let's take you through the consolidated PAT as well as revenue. Both of these have seen a bit of a downtick. Let's find out why have we seen this kind of numbers from Jain, who's the CMD of the company, joining us. Great to have you with us. So we understand that your second quarter, like quarter one, aren't your strongest quarters, but the decline in revenue and margins, both on a Q-on-Q as well as year-on-year basis, has been much more than expected. And the slippage has been for a few quarters now. What's causing this?
Good afternoon. Thank you so much for having me on your channel. The performance of the company in the current quarter is a reflection of and aligned to the strategy that we have been sharing on your channel, particularly with the investor community in our quarterly interactions, wherein we are de-risking our software from client concentration. Now, I'm sure you would appreciate that the strategy would not yield any short-term gain, but has a long-term implication on the future prospects of the company. We expect this strategy to be completed by March 2017. As a matter of fact, on the 16th of October, after announcing our results, we have posted an investor communication on the company website. And I would urge your viewers to please go to the RS website and see the investor communication draft, where we have been very transparent and taken the investor community through our direction for the next couple of years. Now, having said that, I believe that our software, by the time it completes its execution by March 2017, it would have eliminated, number one, client concentration. Number two, it would have become a significant player in the Indian market and transitioned from being an outsourcing services provider to a company having products, platforms, and domain-focused service provider. We are currently investing into products and platforms, and additionally, we are looking at, with our free cash flow reserves of about 180 crores on the balance sheet, we are looking at acquisitions aggressively. There are several acquisition targets being considered right now, and we believe that over the next several months, we would be very much on our path of completing at least one or two of our acquisition possible transactions.
What can you share regarding these two possible acquisition targets?
I beg your pardon?
What can you share in terms of details with regards to these two acquisition targets, in terms of the size of these acquisitions and the kind of business areas they're focused on?
Right. So number one is our software strategy is to stay exclusively focused on the domain of electronic payments. Our strategy is to look at companies that have offerings either for products or for services, or have frameworks that would range right from the testing capability, which is very crucial in the payments industry, to analytics, to security, and to be able to also add more clients through that acquisition. So these are the four categories that we are looking at, and we believe that our geography is spread between the U.S. and Europe and possibly India as well, in order to help our longer-term growth.
Mr. Jain, what would be the size of...
Hello?
Yeah, what would be the size of these acquisitions? Both these acquisitions?
Sure. So the acquisition size could vary anywhere from several $1 million, and we are not really limiting ourselves to really, based on the value or the size of the acquisition, because we believe that what is more critically important for us is to be able to leverage our opportunity in the marketplace and moving toward the digital payments. According to McKinsey, India IT industry revenues which have increased about six-fold between 2004 and 2014, and our software has been on track to achieve the same.
Right.
This industry is likely to grow from $130 billion to $350 billion next 10 years.
Right.
And we want to make sure we are well equipped to be able to address that market for us.
Right. No, but you have about 180 crores in cash on your balance sheet. So I was just trying to get a sense. Would it be,
Sure.
as you said, the acquisition could run into a couple of millions. Would it be suffice to say that the acquisition would be combined, sub $50 million? Both the acquisitions put together?
Well, I would not like to put a figure on the total acquisition value. Like I said, we would want to make sure that it strategically positions us to capitalize on the opportunity, which is really significant for us over the next 24 months, 36 months, and that is where our completion of our strategy transition would be.
Mr. Jain, let's also get a check on the conversation with your largest client, Visa. Is it enhancing penetration in top markets like China, which was opened up last year, and are you going to get a bigger share of it?
Okay. So our relationship with Visa continues to be in place, and we do believe that there will be opportunities in Europe as well as China. Visa is expanding aggressively. We will be a part of that opportunity. The key question out here is about client deconcentration, and that's the single largest risk to our software, and that's what we've been talking about on your channel for about 2 quarters now, where we are consciously reducing our share of revenue with Visa. This strategy will continue. We do believe that we are on track. We know that there'll be pain for some more time to come, but we are fully on track for our long-term implementation by March 2017.
We wish you all the best for that, Mr. Jain. Thanks very much for joining us